Technology stocks are on fire, so with so many choices, how do you sort through the hype to maximize your returns? Hold on to your seatbelts, folks. This is going to be a good one. Artificial intelligence has been a huge driving force within the technology sector. With all the excitement that began with ChatGPT, we now have competing AI chatbots and an explosion on innovation as the AI revolution takes the world by storm. We are now in a world populated by basically three types of people. Those who are impacted big time by AI, those who do not realize they are impacted by AI, and people who kind of, live outside of modern technology. The fact that tech stocks have been blazing into a bull market is not surprising at all. The demand for continued development of AI, as well as the chips and the software needed to power this revolution, is only increasing. The demand will continue to push the sector to new all-time highs, followed by even newer, all-time highs. As an investor, this is all very exciting, as there is the potential for a lot of profits. Unfortunately, not all tech stocks are created equal, and there will be technology companies that still fail despite the power of the sector. Knowing how to sort through the hype and choose the big winners can be the difference between good returns and great returns. There is a way to cut through all that hype and to have someone else do all the work for you. A good tech ETF may be the right choice for you. With an exchange-traded fund or ETF, you have a very experienced fund manager doing all the heavy lifting. They pull together the best of the best when it comes to tech stocks, and they put those all into a basket you can benefit from with the purchase of just one single stock, ETF. As you enjoy the profits, they're doing all the rebalancing to ensure that their basket of tech stocks are the ones that will return the most. If a stinker gets into their basket, they will simply replace it with a better choice when they rebalance that ETF. A good ETF, it takes all the guesswork out of, figuring out which tech company is going to win the day. It gives you exposure to a spread of stocks that will undoubtedly contain the big winners. Join today's conversation. Let me know in the comments if you have exposure to technology in your portfolio. Thank you for your participation. If you love this sort of content, you got to be sure to subscribe for more, and another huge thank you for that click. In putting together today's list, there were considerations to fine-tune the results. I was not looking for straight-up passive income, but I did want some dividends for sure. The big thing I was looking for, though, was moderate to great dividends with very good total returns. These ETFs all have positive growth and nice-looking return on equity values. I'm very happy with these ETFs for sure. So without any further ado, let's do this. Kicking off this list, we have the Harvest Tech Achievers Growth and Income ETF with a ticker of HTA. This ETF holds an equal weight of the top 20 large cap tech companies in the world, and they also utilize covered calls to enhance their returns. Their price at the time of recording came in at $17.87, and they also have an NAV of $17.87. Their net assets come in at $533.45 million. Their beta comes in at 1.65, so they're definitely quite a bit more volatile than the market average. Their price to earnings ratio, that comes in at 34.45, and we've got a return on equity of 37.20%. That's not too shabby. Their management fee comes in at 0.85%. Switching to their dividends, they've got a nice looking dividend yield of 7.275%. It is a monthly dividend of 12 cents per share. Over the last 5 years, their average dividend increased by 21.38% per year. That's fantastic. When we look at their actual returns on their 3-year, their return on investment comes in at 22.82%. Factoring in their dividends, we almost double it to 40.80%. On the 1 year, their return on investment comes in at 35.69%. Add in the dividends, we get a total return of 45.56%. All of these companies today are primed to excel as technology continues to take center stage. Coming in at number 4, we have Brompton Tech Leaders Income ETF with a ticker of TLF. This is another ETF with a solid portfolio of tech companies. Their biggest holdings include companies like Apple, AMD, and Google. They also use covered calls to enhance their overall returns. Their price comes in at $23.80, and they get an NAV of 23.79. Their net assets come in at $115.03 million. Their beta, once again, pretty volatile, 1.61. Price to earnings ratio, that comes in at 40.75, and another good looking return on equity at 38.03%. The management fee on this one, a little bit lower, 0.75%. Looking at their dividends, they have a yield of 5.097%. And once again, we do have another monthly dividend, 11.7 cents per share. And if we look at this one, their 5-year average dividend increase comes in at 23.33%. That is also pretty darn good. When we look at their 3-year return on investment, that comes in at 19.72%. Factor in the dividends, we do get a total return of 32.21%. So switching to the 1 year, that return on investment comes in at 39.51%. Factor in those dividends, we do get a total return of 46.26%. This ETF also does have a USD version with ticker TLF.U for those of you, of course, wishing to not be hedged to the Canadian dollar. Taking our third spot, we have the CI Tech Giants Covered Call ETF with a ticker of TXF. This ETF is primarily focused on U.S. equity exposure to companies in the technology sector. Some of their biggest holdings include NVIDIA, AMD, and Meta platforms. They, as their name suggests, also use covered calls to enhance those returns. Their current price comes in at $21.01, and they have an NAV of 21.02. Their net assets come in at $655.53 million, and their beta still pretty volatile, 1.58. The price to earnings ratio, that comes in at 37.90, and they have another good-looking return on equity at 27.75%. Their management fee, once again, a little bit lower than the first two, 0.65%. When we look at their yield comes in at 6.995%. It is a quarterly dividend of 33.6 cents per share. And over the last 5 years, their average dividend increase, not that great, 0.36%. Looking at their 3-year return on investment, that comes in at 1.01%, but it gets saved when you factor in their dividends, bringing it up to 25.38%. On that 1 year, the return on investment comes in at 41.67%, and we do get a total return after we add in the dividends of 51.42%. With a higher focus on the chip companies, this ETF definitely is setting themselves up to succeed. In our almost top spot at number 2, we have the Harvest Tech Achievers Enhanced Income ETF with a ticker of HTAE. This ETF holds, well, HTA, the ETF we started this list off with. Of course, through that ETF, it does have that equal weight of the top 20 large cap tech companies in the world. The difference with the enhanced version is that, well, they also do use the covered calls. But in addition to that, they use some modest leverage on up to 25% of the portfolio. Between the covered calls and that wee bit of leverage, they try to really enhance the returns. And seeing that they made it to number 2, that may just be working out for them. Their price comes in at $16.24, and they have an NAV of 16.25. Their net assets come in at $45.02 million, and they have a very average looking beta of 1.03. Their price to earnings ratio comes in at 37.62. Look at their return on equity, very nice looking, 37.03%. The management fee on this one, well, technically there's none, but they do charge the fee of the underlying asset. So you are going to pay the HTA one, which is 0.85%. When it comes to dividends, we're looking at a higher yield of 8.584%. It's a monthly dividend of 13 cents per share. Their 5-year average dividend increase, that works out to 4.53%. Looking at their returns, on their 3-year return on investment, that comes in at 58.75%. Factor in the dividends, we get a total return of 75.46%. Their 1-year return on investment, that comes in at 44.36%. Factoring in the dividends, we get a very healthy total return of 56.73%. This one is riskier than the normal covered call option, but I do have a feeling that the payout will remain good as long as tech continues to run. In our top spot at number 1, we have the BMO Covered Call Technology ETF with a ticker of ZWD. This is once again another great ETF with some awesome technology exposure. Their top holdings include NVIDIA, Meta, Amazon, and Microsoft. Of course, like all of our ETFs today, They do employ covered calls to pump up those returns. Their price comes in at $41.66, and they have an NAV of 41.62. Their net assets come in at 89.59 million, and they've got a pretty volatile beta at 1.43. Their price to earnings ratio, 42.40. Their return on equity, that comes in at 32.38%, and they've got a pretty low management fee of 0.65%. When it comes to dividends, they have a yield of 3.385%. It's a monthly dividend of 13 cents per share. Now, in this case, their 5-year average dividend increase is nothing. Their dividend has been 13 cents for a long time. Their return on investment, when we look at the 3-year, that return on investment comes in at 35.22%. Factor in the dividends, we get a total return of 47.39%. When we look at the 1-year return on investment, that comes in at 58.52%. Add in the dividends, we get a total return of 63.47%. Holy banana bread. That's pretty good. Interestingly enough, this ETF has the smallest of the yields, but yet they top the total returns. This is a testament to how well this fund has been managed. These ETFs are pretty exciting in my opinion. There are even more options out there than this, and I could have easily turned this into a top 10. However, these 5 really captured what I was looking for. In the future, I know we will be returning to this sector, and of course, if you want to see more tech stocks, just hit me up in the comments. If you are interested in any of these ETFs we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out my video on big total return ETFs linked over there on the left. Of course, thank you for watching, and I will see you in the next video.